measurement fundamentals. To continue with financial accounting fundamentals, we're going to turn and look at the qualitative characteristics of accounting information. And the first and overarching qualitative characteristic of accounting information is it has to be understandable. So understandability and by the user, so that the user can use the information at hand. The second criteria or characteristic is that the information is useful for the decision at hand. In other words, the user can have informed decisions and make good judgments based on the information. Now, underlying these are some other concepts or characteristics, and one is relevance, that in order for the accounting information to be useful and to be understandable, it has to be relevant. In other words, does it have a predictive value? Does it help the users make predictions about the past, present, or future outcomes of the business? Does it have feedback value? Does it confirm or correct prior expectations that the user had about the business? Does it have timeliness? Is the information available to the users before it loses its capacity to influence decisions? Secondary to that is comparability, and comparability is talking about that the methods are comparable between different entities. In other words, similar information measurement and reporting methods are used by different entities, so that when you look at these methods for one entity, you know that that method is comparable to its intent when it is used by another entity. Other things that you have to look at as far as is the information understandable and useful to the decision at hand is, can the users depend on that information? In other words, reliability. Is it reliable? And to determine if it's reliable, it should have the characteristic of being verifiable. In other words, independent measurers would agree on that same value using the same measurement methods. Also, that the information is neutral. In other words, free from bias towards a predetermined result. And if the information is representationally faithful, in other words, there is agreement between the accounting numbers and the descriptions of the resources or events that they purport to represent. Now, secondary to that is the concept of consistency, and that means that if I was looking at a single entity, that same method to account for similar events is used not only in this period, but last period, or any period that is being disclosed in the financial statements. So I hope this is useful to you in thinking about the qualitative characteristics of accounting information. That in order to be understandable and to be useful to the making decisions by users, that it must be relevant, it must be reliable, it needs to also be comparable and consistently applied.